Welcome to a brand new segment here in the garage. We call it Bitbusters, where we take the biggest claims in crypto, throw them up on the lift, and see if they're really built to run or just straight FUD and old wives' tales. Because in this game, there's a lot of noise, a lot of flashy charts, a lot of trust me bro threads that look smart but fall apart the second you open the hood. For our first episode, we chased down a big one. Bitcoin follows the global M2 money supply with a 90-day lag. Now at first, we laughed. Seemed like macro hopium wrapped in a chart. But then we saw it again and again. And when something keeps hitting the garage feed, we don't debate it, we check it, garage style. First, M2. That's the total money supply, cash, savings, near cash. Think of it like the fuel tank for the global economy. The claim is that when M2 rises, Bitcoin follows. But not right away. Bitcoin waits about 90 days, then hits the gas. So we pulled the data, mapped out M2, mapped out Bitcoin, shifted M2 forward 90 days, and it lined up. Late 2023, M2 goes up. Early 2024, Bitcoin rips. Mid 2024, M2 stalls. Bitcoin cools. Late 2024, M2 rises again. By May 2025, Bitcoin breaks 100K. Not a coincidence. That's timed ignition dot. We even stripped out the bad data spike from India that had everyone screaming about 220,000. Cleaned up, the projection falls somewhere between 130 and 180K. Still strong. Still grounded. But that's when things got deeper. Because the M2 chart, that's only half the story. What it doesn't show is what's happening right now, and that's where this theory falls apart or levels up. So we kept going. Ran diagnostics. Checked every exchange balance and on-chain trend we could find. And when we needed to confirm what we were seeing, we called in the top analyst in the garage, Lulu the Crypto Pig. She sniffed the data, paused, and gave us 2 snorts. And in this garage, 2 snorts from Lulu means we're onto something. Right now, there are about 2 million Bitcoin left on exchanges. That's the available supply. At the same time, ETFs are pulling in around 5,000 Bitcoin per day. Add in sovereigns, states, and private buyers. And you're looking at about 6,500 Bitcoin a day being removed from circulation. Post-halving, only 450 new coins are mined per day. That's 6,500 out, 450 in. That's a net drain of over 6,000 Bitcoin every single day. So we ran the garage math. If that pace continues, Bitcoin's liquid supply on exchanges could be gone by March 2026. 0. Nothing left to buy unless someone gives it up. That's not a guess. That's not a model. That's hard depletion math playing out in real time. And here's the kicker. Back when people started linking Bitcoin to M2, we didn't have this kind of demand. We didn't have live ETFs. We didn't have state-level accumulation. We didn't have countries stacking sats. We didn't have Larry Fink, the CEO of BlackRock, out here saying, if every millionaire in the world wanted 1 Bitcoin, there wouldn't be enough to go around. That kind of demand. It was never in the model. M2 might show the fuel, but it doesn't show the twin turbo we just bolted onto the engine. This isn't just macro liquidity anymore. This is institutional FOMO, sovereign game theory, and a digital asset with a hard cap, being drained day by day in front of our eyes. So yeah, this all started with a chart, a Twitter thread, a maybe. But after what we found, this feels less like a theory and more like the final lap. Because when Lulu snorts twice, we don't ignore it. We fire up the lights, hit record, and bring it to you straight from the pit. This is Bitbusters. We don't chase hype. We chase the truth, and if it runs clean, we let it rip. Like and follow for more drops from the garage. Because next time, we're going even deeper.